Good evening and welcome back to the FiTT Show. Financial information for today and tomorrow. And I'm Bobby P. Kinzer.
And I'm Thomas Doty.
And I'm exuding extra amount of positive information because I'm trying to uplift my good brother Thomas Doty. God, boy, you look like you draining me. I'm looking at you, my God dang. No.
Rough day, brother.
Hang in there, my brother. Welcome, everybody, to the FiTT Show. Yes, we are here to help our people get their finances in shape. Now, we had a hiatus from last week because I had a very special heart procedure. And as you can see, obviously, I made it through it and I'm doing very well. So thank everybody for the concern, the warm wishes, the notes of good prayer and healing and all that good stuff. Thank God for modern technologies, though. I'm just trying to tell you. And the one thing, if you have something these days, if you live long enough, they're going to have a cure. That's all you got to do. Make sure you live long enough. So with that, I'd like to just let you know this is Thursday. Oh, man, I just realized today is September 11th, though, 9/11.
Yep.
And that was, what was that? Was that 2002, 2000,
2001, I thought.
2001, you got it. Wow. Can you imagine that was, dang, 24 years ago?
Yep.
I remember at 2000, the dot-com bubble, right?
Mm-hmm.
And that was a major, the market dropped about 40%. And everybody was gloom and doom. But then 2008, though, believe it or not, was the banking crisis, right? That was 2008. No, actually, it wasn't called the banking crisis. Was
it was 07, wasn't it?
In the 80s. No, it was 80. I was there. I worked on that.
The financial crisis.
It was the loan crisis, but 2008 was the economic downturn, which mortgages and things like that. So we've been through a lot, y'all. And despite going through all those ups and downs, you all, guess what has weathered the times? The stock market. And we're going to talk about that today in a minute. But first, I just got to get past some technical administrative duties. We want to first give a disclaimer. We're not financial fiduciaries. We are not financial advisors. We are financial educators. So anything you hear that we say on this is just our views, and it's not. Should you really want to seek specific and particular individual advice, please engage in CFP, certified financial tax planner, a financial advisor that is qualified, and that always helps. But just want to give that disclaimer. Second, we'd like for you to click on that heart button. It's very important. That's how we get to reach more people and have traction. So we appreciate that. Our community is building. We have about 540 followers now, and that's not all at once, but that is people that most people usually don't watch us live. They actually go back and watch, go back and watch our show after the program because everybody got so much going on these days. So one main thing is the comment box. That is very important, you all, because even though me and Dote is in North Carolina and I am in, well, I keep saying North Carolina. It's always get mixed up, though. It's really South Carolina, correct?
Yeah, I live in South Carolina, but I'm very close to Charlotte.
Very close to Charlotte. And I am in Bowie, Maryland. But the way that we can interact with you is the comment box. And plus, the more comments you put in the comment box, the more algorithms we reach more people. That's how Facebook works. Please make sure you go on Facebook Live and share this with other people. That's how you can connect us and we get followers. And the other thing is YouTube. Right. Please subscribe on YouTube, and that's how we connect with people and with your people. And we try to give unbiased information. Another full disclosure, we get a lot of our information from a lot of different financial publications like Kiplinger, Vanguard, Fidelity, Smart News, and a lot of places. Any place that is given good factual information, we try to share that with you. And that's the key, you all, to building financial wealth. It's not being smarter than somebody. It's not going to school and getting a bunch of degrees and certifications. It's really about just educating yourself with the basic understanding of personal money management. That's what we try to provide. So, with that, if you have any questions or comments or anything we're saying, please in the comment box. With that, though, I'd like to go to the video, as they used to say. What Warner Wolf used to say, the great sports guy. Our top subject that we start at the top with you all always is the stock market. And though last previous times you really didn't give us any good news, so through the calculation of odds, what's going on today?
Man, this market is really crazy. It continues to go up. There's been some choppiness, but if you look at the S&P 500, and this is a 2-week time period because we didn't meet last week.
Correct. Glad you reminded. Right.
Yes, for that 2-week period, the S&P is actually up 85 points, 1.3%. You look at that year to date, it's up 13%. And we always talk about the S&P averaging around 10, 11% a year. It's up 13% already. NASDAQ in that 2-week period kind of had a nice little move. It's up 338 points, 1.6 for the 2-week period, 14% year to date. Now, the stocks I roll with, Microsoft is down for the week, this 2-week period, it's down 9 points. But year to date, it's still up 19%. Apple had a little drop, and a lot of it's because of their September presentation of new products, and it didn't, I guess, knock the investment world over. And it usually has a little drop after that, but it's still down 8% year to date, and a lot of that's due to tariffs, China, what's going on in China and their iPhones, but I still expect it to continue to do well. Nvidia had a little burp in its action, even though a lot of retail buyers are still buying Nvidia. A lot of the so-called Magnificent Seven, Microsoft, Apple, Facebook, Meta, there's a lot less action in those, but Nvidia is still going strong. But year to date, it's up 32%. So I'm really happy with that. Google kind of got out of the Justice Department jail, and they announced they weren't going to make or break anything up. They had a nice little roll these last 2 weeks. It's up 29 points, almost 14% in this 2-week period. Look over at year to date, it's up 27%. Pfizer still flat, 25, down 7% year to date, but that's only a couple of points. And I'll always remind you, I get a 7% dividend on that. Palantir had a nice little bounce back. It's up 7 points for the 2-week period, 116% year to date. UNH, that's United Healthcare, and that's the one I bought. I got in here at 301 on August 15th. It's up to 354. It's rolling, and I'm happy. It's up 52 points in this 2-week period, which is just crazy. I'm actually up 53 points on the year to date. So I got in at 301. So I am extremely happy. You can see that year to date, it was up. It closed the year at 504. And that's one of the main reasons I jumped in at 300 was because that's the biggest healthcare company in the country. And they had some issues with one of the executives was murdered in New York, and they had some issues with the Justice Department as far as the way they were handling claims. But they got a new CEO who came in with a nice plan to get everything straightened out, and it's going good. I'm extremely happy with this, and hope it continues to go up. But I tell you what, I don't feel any comfort in this market just because tariffs are still out there. I think the Supreme Court's going to decide what's going on with that. I think either way, there's going to be a lot of turmoil in the next couple of weeks, months, as long as there's all this turmoil going on in the world and our presidency and people getting murdered. And so I feel no comfort in the market. I'm a little nervous. I'm not getting out, obviously, because I never do, but not sure I'll put any more in than I already have in. But that's where we are. Pretty good 2-week period. You look year to date, everything is going in the right direction. So my personal portfolio is doing quite well.
Yeah, though mine is too, and we don't show this, but we both they're into commodities, specifically gold and silver. You have a gold fund, and I actually physically have gold stored in a safety deposit bank, like safety deposit box. Physically, I hold gold and silver, and my gold is up. I got in 2016. Gold is now trading at 3,600 and some change an ounce. Um, so I made 276. That's a 276% increase for me. And silver, I got in at $16 a share. That's somewhere around about 45, 46 today. For me, that's a 287% increase. So um, we only use, our portfolio, not encourage you to do what we invested in, but just to let you know, what we've done by investing. So we're not encouraging you to just particularly purchase what we did, but I mean, if you look at the metrics of it, you make the decision. But that's why we share this information. So, though, the next thing we talk about is cryptocurrency. Now, cryptocurrency hasn't been doing that good. Kind of slowed down. The cost across all cryptocurrencies, probably you look at the increase, it's been around about 3%. But what is interesting, though, the market cap, that's what you look at the cryptocurrency, because that gives you, how many people are, in the market. And the total market for cryptocurrency is over $4 trillion. And, what's interesting, though, half of the cryptocurrency market is the Bitcoin. And I think the Bitcoin is about at about just a little bit over $2.2 trillion. So it's about half of the market is driven by Bitcoin, which is so interesting. And that ended at $115,375 per Bitcoin, and that's up, believe it or not, from this is from 2 weeks ago because we had a week off. Compared to this week and 2 weeks ago, that's a $3,031 increase, roughly 3% because of the value of the Bitcoin. Though there's a lot of information going out these days on stable coins because the the SEC is getting ready to regulate just stable coins, and Ripple is one of the stable coins, and it's only up 2%. It's interesting. It's about $3 a coin, but what it is stable coins are usually backed by a dollar or another asset one to one that gives it a little bit more security. But they're just that cryptocurrency, not Bitcoins, not Ethereum, which is called smart contracts, but stable coins. And banks are going to be starting to get into the business. Right now, banks, you can hold cryptocurrency as a custodian, a bank to hold your cryptocurrency, but you can't trade it. But President Trump has just passed an executive order that for stable, was that, no, is that considered under Trump? Yeah, he signed that for stable coins. So anyway, as we speak about cryptocurrency, we always want to remind you, be careful on invest money that you can take the hit if you lost that money. Don't be putting your mortgage money or your car note money in on cryptocurrency. Other one that's really doing well, Binance. I remember I was watching Binance. Binance is up. I remember when Binance was just $70, and that was just before the pandemic. It's up to $903 per crypto for Binance, which is another platform actually to be trading cryptocurrency on. And Solana is another one. We track the top six and top. We try to stay within the top six, and there are now over 9,000 cryptocurrency and about 45,000 cryptocurrency. Period, but only 9,000 are active. So that should give you interesting understanding about cryptocurrency. And I just want to tell people, beware of those meme coins, because those are even, I mean, all of these are risky, but those are even riskier. So with that, the week before, we talked about the 401k, the pitfalls to avoid in your 401k. We hope that was very helpful, and I've got a lot of response back, and a lot of people actually told me it was very helpful. But today we're going to be talking about uh, is your cash working for you? Make your cash work. A lot of people, especially nowadays, I'm talking not just individual investors though, but even the big boys, because the uncertainty of the market and the economy these days, not just the market, the whole economy, tariffs, prices, and stuff. A lot of people are sitting on cash, and we want to talk about that.
Yeah, we do, and a lot of people are sitting on cash because they're happy and secure and feel safe. But we always talk about how inflation is eating up your purchasing power and the value in the market. You talked about my personal portfolio, and I'm no genius by any stretch of the imagination, but a lot of the stocks I pick, I do real well. And it's not that I know anything that anybody else doesn't know, but I take my time. I look for certain things in the stock market. And sometimes I look at something that's dropped a whole lot. Sometimes I look at things that are out of favor, kind of like United Healthcare. And the way the market's going now, just about everything's going up. So anybody who's invested is probably making some money. But the problem is a lot of people are just sitting on cash. Interest rates are going to start going down. Me and everybody else is guessing the Fed is going to cut interest rates, and that's just going to drive some of these CD rates down from the 4 to 5% down to the 2, 3, 4%, 2, 3 up to 4%. And they're talking about 2 cuts by the end of the year. So it's not too late to put your money to work. Try not to get stuck on regrets over missing these stock market gains. We always talk about the Dow, but the S&P going up about 10, 11% a year. And so this might be the perfect time to buy. There is no perfect time to buy, but it's never too late to get in. You just try to choose a good, well-rounded investment that takes on the amount of risk that you're comfortable with.
Okay. Got a quick question though from Mo Better. See, I have a question. Why are people saying get stock before September 1st, 2025? What's going on? I don't know, Mo, but I haven't heard anything about that.
Well, September is usually, if you look back through history, September is usually the worst performing month of the year. And so that kind of runs counter to what you're saying, because it seems like you'd wait till, if you expect the market to be bad, you would you'd be getting out by September 1st.
Right.
So I haven't heard that one. I don't know where that's coming from.
Right. Yeah, I haven't heard that one even, Mo Better. But I do know for electric vehicle owners, September 30th is the last date that you can have the $7,500 credit that you can write off on your taxes. That does end September the 30th, and that was really a big incentive for a lot of EV owners. That $7,500, and that was a credit, not a deduction. So credit's like a dollar for dollar. Isn't that the right way to say that, Doug?
Perfect. Sound like a tax man.
Which I damn sure ain't. But that's why I do know this happened in September, Mo Better. But if you give us a little bit more information, like where you heard it and why, because if
What's
you
the
heard
context?
because if you heard it at the beauty salon, well,
Stop, Bob.
if you heard it from the Asian fingernail place, no, I'm stopping. So look, there are reasons why you might find yourself actually sitting on cash. There are reasons why you might hold a bunch of cash, and I get that. For example, maybe you sold your investments at some point, right, and you just left it in the cash account, and you've been building up cash in an IRA or brokerage account, but still haven't chosen any investments other than that, or maybe you've never gotten totally comfortable with investing outside of your 401k plan. I get that. I give you credit on that. But, whatever your reason, it's never too late to get more fully invested. Whether you invested 100% in cash or just have more of it than than you would be necessary in your emergency fund, or more cash than you need for short-term goals. Now, here today, we're going to discuss some steps to consider to help you finally get off the sidelines. Because me and Dote always talk about maximizing your earning potential.
Yeah, and the first thing is figure out the big picture for yourself. Putting a portfolio together from scratch can be a huge undertaking, but you break it into pieces and work on each piece one by one. That'll help you keep from getting stuck. So we always talk about the basics. And the first thing is how much risk you take. We can't emphasize how important that is. You think a lot of people think in terms of how much an investment may rise or fall in price, but the right level of risk may depend on how far away your investing goal is, right? If you're saving for 30 years from now, then you're not that worried about risk, okay? So you also have to think about how comfortable you are with dips in the market and, of course, your financial situation. And so then you talk about, once you determine how much risk you take, you got to think about your investment mix, your asset allocation. And that's your mix of stocks, bonds, cash, or any other investments that you may choose to have. And that's going to be based on your risk tolerance and your time horizon and what your goals are. And so the higher your risk tolerance means you're more comfortable holding investments with higher risk and higher returns, like stocks or maybe even cryptocurrency, okay? And so as you try to put together your portfolio, you might work with a financial advisor to get help, somebody who's unbiased and can maybe take the emotion out of your thoughts, and that person can help you clarify your needs and your situation. But if you need to talk to somebody, find someone to talk to, just to make sure, even if it's just to listen to your self-talk, so you can make sure your own personal things that may be holding you back, somebody can say, hey, you might be able to take a little more risk here, or you might want to take a little less risk there. So if you need help, get help. We always say that.
Mo Better says, oh, yes, you are responsible for your opinions. Remember when we gave the disclaimer? She said, laugh out loud. And let me give you another laugh out loud. Yeah, right. Okay. Like I said, we did not have sex with that stock. That's a Bill Clinton. So Mo Better came back though. She said she got that information. A guy at the restaurant, so at the restaurant said that Trump said it. He owned a restaurant that I went to. Okay. Two things. I I submit to you, Mo Better, that you qualify your resources. And two, if you're eating there, I might question what you're eating. No, I'm just going, I got jokes. So let's get back to the show. Let's get back to the show. So one of the things you all, and getting off the sideline with cash is you need to focus on future opportunities, right? Now, me and Dope talk about this all the time. That's why we give you some of our stock opportunities. Now, remember, although there are no guarantees, the stock market has historically risen over the long term, and being invested in stocks and bonds have provided better growth than cash over the long periods. There's no doubt about it. And now, sound set of investments that are well suited to your comfort level. Remember, that's important. Suited to your comfort level and goals, and that fit within your financial plan can give you the chance to get a piece of the action next time around. Like we said, you cannot time the stock market, but you must be in the stock market to to get anything out of it. So look at future opportunities, and I mean, you just can't listen to any and everybody, but don't be afraid to explore other investment opportunities.
Yeah, let's say you're sitting on a big hunk of cash, and you want to decide you want to jump in, okay? And so it's a couple different ways you can do it. You can take that lump of cash and jump in all at once, with one or several big trades, or you can invest gradually over time, gradually and consistently with smaller purchases. And each way has its pluses and minuses. If I was doing it right now, I would invest over time just because I think these are very, very shaky times right now, and I'm expecting a correction at some point soon. But again, that's just my personal preference. But like I said, each approach has its own pros and cons. And so if you invest it all at once, that gives you your money's in the market. It has more opportunity to grow. Okay. And that could be the slow and steady approach. But if you spread your investments over time, we always talk about dollar cost averaging. That's where you invest consistently over regular intervals. You're buying, if the market goes down, you're buying more shares. If the market goes up, you're buying less shares. And so if you choose to go gradual, you may want to automate it just so you make the same investment every month, maybe a couple $100 or a couple $1,000 or whatever your situation might be. But it's sitting on cash, you're not going to gain any wealth sitting on cash, that's for sure. So just figure out how you want to jump in, slow or all at once.
Another good question, though. Is Robinhood the best place to purchase stocks? And there's another piece to this question. Let's take a piece at a time.
No, there's no best place. It's where you're comfortable with. You check the fees. You got Robinhood, Charles Schwab, TD America, Fidelity. They all have their benefits. And you do your research and find out which one best fits your needs. These are all low-cost brokerage firms. So I mean, there is no best. There's just different.
And that's the key too, because some are a little bit more secure than others. Now, Robinhood hasn't been around as long as Vanguard or Fidelity or T. Rowe Price, but a lot of young people use Robinhood, and and that's a place, it's a platform that you can go to. The other question. How are the machines at the store for Bitcoins to purchase Bitcoin? Do you think it's safe purchase it from the store?
Personally, I wouldn't do it. I have mine in Cash App. That's how I get mine.
Right. Mine is in Cash App too. And I also have the platform Coinbase, because those are like secure platforms. But,
and getting it from a machine, then you got to do I have to do it, but I'd imagine you have to do the bookkeeping yourself. Or if you, like I have it through Cash App, I can look and see, what I paid for it, when it's time to tax reporting. If I do sell it, they'll send you the 1099 or whatever the form is, so you can figure out what your tax situation is. I'm not sure how it would work out of a machine. So that's my own personal opinion.
This is the other reason why you wouldn't want to purchase Bitcoin, not just from a machine, but just that physically have Bitcoins. The same issue I had with holding gold physically as opposed to having it in a fund. If you have gold and you hold it physical and you need that money and you need to exchange it, you'd have to go find a place where you first can trade it. And then secondly, you find a place that you can trade the Bitcoin. You also going to be hit with, they're going to not give you with the value that you see online. They're going to negotiate, they're going to barter and negotiate how much they're going to give you for the Bitcoin. And secondly, they're going to charge a fee for you converting it. So it really doesn't give you an advantage purchasing, unless you just want to hold, because some people just want to physically hold their asset. And if that's what you want to do, but just remember, and I'm not telling you what to do, but if you want to exchange it and you need that money fast, it's not liquid. It's not like you can go into a bank and exchange crypto coins for cash. Good question. Very good question. Next question. What's the lowest amount of money you can invest a week? That's
yeah, and I don't think there is a minimum, because like with Cash App, you can buy $10 worth of stock. And what you're doing, you're buying pieces of a share. And so I don't think there is a minimum. uh, of what you can buy, and you have to look at each of the discount brokerages, uh, what the requirements are. But I'm pretty sure you can buy very, very small dollar amount increments
Right.
of a stock. Very
Now,
small.
if you're looking to purchase like ETFs, electronic exchange funds, um, or mutual funds, now they only let you you can like have an investment. You can buy it any time, but if you wanted to just have consistently, you want to purchase some, you can purchase as low as $25 a month in an account that will purchase it every month for you. But that's the lowest amount that you can invest if you're trying to, like what me and Dope talked about, consistently investing and doing dollar cost averaging, where you buy a certain amount of shares in a mutual fund every month, where they do have a minimum. If you're doing it on automatically online, the one that some of the minimum is $25.
Yeah, I just did a quick search, and I'm seeing 25. I'm seeing 100. Yeah,
Right.
it's a very, very small amount.
Very small amount,
And
yes.
Cash App is the same. I know Cash App's the same way. I'm sure Robinhood is also.
Right.
And that's what's one of the things that's interesting, because a lot of the millennials who use Cash App and Robinhood, they're doing exactly that. They're buying $50 a week or whatever, whenever they get paid, worth of stock, and that's how they're doing it. You know, and
Right.
they invest a lot more readily than some of us old heads do, just because of what we've been through and what we know and what we don't know. They're a little more aggressive and aware, and they're so comfortable with smartphones and the internet and working, buying stocks like that, that it comes a little easier for them. But that's basically what they do. They buy very, very small increments of stock every week, every biweekly or monthly, depending on when they get paid.
Right. So I hope that answers the question that you asked. Good questions. Another thing to consider when you're sitting on cash, consider which investment could work for you. Because not me and Joe said not all investments is for everybody. You need to know your investment temperament and profile. So you need to pick specific investments. Now, though the number of options could be overwhelming, no doubt about it, don't feel like you need to research every possible investment. Focus on building a diversified mix, either on your own or with help from a financial professional. Now, Fidelity and Vanguard, they provide various research platforms to access information on stocks, bonds, and mutual funds. So you can look into that. And it's okay to keep it simple. In fact, you can invest in a diversified portfolio with a single fund, or you can invest in what they call a professionally managed account, which the fees usually are higher.
Okay. I've mentioned this before, and it's very, very important. If you need help, try to get help. And because a lot of people have every intention of starting to invest, and it's just hard to get going. Or even the thought of just being too nervous or anxious about putting your money into the market, that's the reason a lot of people don't follow through. And so if you're one of those and you get stuck, then maybe you do need to talk to somebody who can help push you along, get you moving in the right direction, help you identify your risk. There's all kind of tools for helping you identify how much risk you're willing to take. But it is kind of an arduous task to sit down and say, okay, this is my financial situation, and this is what I'm saving for, and this is how much I'd like to have at this point in my life, or at this point in my life plus 10. And how much do I have to invest? Those are the kind of things that you have to sit down, take some time, and work through. And so if you need help, need someone to help you do that, find someone to help you do that, to walk you through those steps. Before you go talk to somebody, make sure you have a general understanding, because they're going to ask you, what's your budget? How much do you have to invest? What are your goals? What's your time frame for when you might need to use the money that you're saving, whether it's for retirement, whether it's to buy a house, whether it's to pay for college. Those are the kind of things that you can work through yourself. And once you do all that, the answers should be pretty clear to you, but you may need some help. And so, once you do all that and you're ready to take the next step, then you can start researching investments. You can do that on your own. You can look for, if you want to just not have to be looking at how individual stocks did, you can just buy a broad-based mutual fund. I always recommend the S&P 500, and you can get a mutual fund or ETF that mirrors the S&P 500 through any of the large brokerage firms. They all will have some sort of S&P index. Or you can also get a robot managed account, which is what they call about robo accounts.
Yep.
And with the help of AI, they figure out what to buy. Then you don't have to get involved at all. Or, of course, you can always work one-on-one with some sort of investment professional to help you figure out what you want to buy. But, I mean, you guys have followed some of the stock I bought. They've all have gone up except maybe Pfizer's, but that's about the only one that I've just really been and I don't want to say a dog because, again, I appreciate the dividend. I'm happy making that 7% a year, but everything else I bought has gone up tremendously. I mean, Nvidia's from 17 to 177. Apple, I think I got an Apple at like 130 or something like that. Microsoft, I got in the early 200s. It's up over 500. So it just takes time to figure out what you want to buy, how much risk you're willing to take, and do a little research. It's not hard to pick a stock that's doing well. It's not difficult at all.
I like to make a public service announcement. Don't, he's telling you his stocks. And I ain't seen nobody like him. He's been hitting on every one of his stocks, y'all. I've never seen this in my life, including my own stuff, because I got but Dote has the golden touch. I'm telling you, Dote, you got the Midas touch, man, because I'm telling you, told me about Palantir, and it's up 136%. And that was like last year. And then you told me about United Health, which is a few months ago, and that's up too. So, y'all, I don't know about Dope, man. I think he got some little leprechaun or some kind of inside trading or something, though, because I've never seen nobody as fortunate. Like you said, it's not like you got some major matrix, but, Dope, which you don't tell people, you do have some basic matrix or things that you do look at before you purchase a stock.
Yeah.
Would you like to share that with us?
Well, again, I go back to what makes sense. A lot of it's just common sense. What buying companies.
Everything is common. Sometimes don't make sense. So what do you mean by that?
No, but you just got to be on the lookout for something that you think might go up, and sometimes it's stuff that everybody else is buying that makes sense. Sometimes it's stuff that just you think. When I was reading about Palantir, and it talked about how they had it in with the government. And I know AI is going real big, and they were like, I don't want to say they're a data mining company because they're really not. They're more of a software company that helps you work with your information. But I just found an article, read about it, got to looking at it, looked at some research analyst reports to see what they thought of it, and then made the plunge. And same United Healthcare. I'm reading about it. I'm reading about all the trouble they're having, and I see they're the biggest healthcare company in the country. And one thing we know is everybody's living longer.
Yeah.
And everybody needs healthcare. And they're the biggest. So that when their stock went from 500 to 200 and something, I'm thinking it's not going to stay there. It's bottomed out. So again, I jumped in there. But yeah, and it just, I am retired, so I do have time to read a lot. And that's what I do. And I've done really well. Been very, very, very blessed.
Yeah, and that's thanks for sharing that with us, though, because just once again, it's not about being an expert or being a scholar or having a degree in any of this. It's just, first of all, just getting the basic information that I talked about, just a minute ago. Just keep it simple. You don't have to be major. Just keep it simple to the products that you use every day. I've been tracking Procter and Gamble, though, and that's Procter and Gamble's up, especially in these times. I forgot what they call that stock. What do they call that stock, though?
I know, like a staple.
Like stable. Thank you. Because remember Procter and Gamble, y'all got toothpaste, toilet paper, paper towels, all those kinds of things. And I've never purchased it. I know you haven't either, though, but I've been tracking it. It has been going up like wildcats, but it has been going up and up and up. It has not gone down. And I would think, and I don't know. I don't know how these tariffs is going to hurt people like Procter and Gamble with all those products, the soap powder, the soap, all of that they do. I wonder how.
But people got to have them, so people are going to buy them. Hey Bob, show the update chart real quick. Can you do that?
Yep. For stocks.
Yeah. Can you pop that up? I just want to make one more point before we wrap up. And see, if you look at if you go back and look each week, every week something different is up. Okay, this week it just so happens to be Google and United Healthcare, but that's the benefit of being diversified. Because you go back over the year to date, everything's up year to date except Pfizer and Apple, and we won't count Pfizer because Pfizer is basically flat, but everything is up but Apple, and that's the benefit of being invested or being diversified. Because every week something else is up. They're all up in total except for Apple. Okay.
Don't say that either. I just looked at it. United Health. I didn't know the year over year is 30% down.
Yeah, because at the end of December it was 504. It's one of the reasons I got in at 300. Okay, and December 31st it was 504. So that was all part of my little research thing. But the important thing is being diversified, having money in different buckets, is going to keep your total average up, and that's why you got to be diversified. You don't put all your eggs in one basket.
And this is another thing that people don't know. It's not that your whole portfolio, you've just been fortunate, though, to pick some great winners, and the majority of your portfolio, everyone is performing. But that's not everybody. Though, on the average, most people, if they have a diversified portfolio of maybe 5 to 10 different stocks, it's usually just 1 or 2, or maybe 3 if you're lucky, that are doing good, really good, that usually lifts the portfolio. Let me give you another example, macro-wise. When people understand, like the stocks now that are called, what is it called, though? The Magnificent Seven?
Yeah.
They used to be different back in the day. I'm talking about back like in the 30s, it was oil and the railroad stocks carrying the whole United States economy. It's always just 2 things. And right now, look at the 2 that's really carrying America, NVIDIA and what's the other biggest one, though, that's really carrying America right now, would you say?
Well, Oracle just went bonkers up.
Right.
It went up like 30% in one day.
Right.
But AI is pushing everything, really.
Right. Right.
Yeah.
Right. But I'm just saying, but my point is that it's not that your whole portfolio is going to be good. The reason why you diversify, because if you're fortunate enough, 1 or 2 of them are going to jump out and it could possibly be carrying your whole daggone portfolio. It's not that, you're going to be hit like dope. And I think I got like 4, 5 out of 10, but then I got 6 that were just dogs, but I only lost, I've made several $100,000 off of those other few, but lost maybe total of probably, what I think about if I lost on those 5 though, at the most I probably lost about maybe 10, 15,000. But yet I made over a few $100,000 on the other 5. So,
right.
I mean, you get the point I'm trying to make. I don't mean to be living.
No, it makes sense. That's why you diversify, because all you need is one superstar.
Right.
One stock that goes up by 10 times. In my case, it was NVIDIA and Microsoft and Apple and all of those Googles. They've all more than doubled. But you got to get out there if you want to hit some home runs. You got to take some swings.
And you got to be consistent in investing too. That helps. Modestine said beauty products. Yeah, yeah. That was always
Ulta Beauty Supply is doing real good as a stock. I've
right.
actually considered buying that because my girls use that stuff, but I
Right.
haven't jumped in yet.
Yeah. No, I want to talk about holding on to your investments as far as using your cash. Instead of obsessing over the perfect timing of the stock market, stay focused on your end goal, right? We always talk about have a goal, know what your horizons are, which is actually getting invested. Missing out on only a few days of the market gains can make a big difference to your portfolio long-term returns. We showed charts before why just staying out of the market a couple of days, a couple of months could be a big difference in your returns. And in fact, staying invested while markets are down have historically provided some of the best subsequent returns.
That's for sure. Well, let's wrap it up, buddy.
Well, you got one, yeah. Well,
No, we
yeah,
did
hit
that
the
one.
last one.
We did it.
Oh, get help if you need it.
Yeah, I just talked. Yeah, we did
Oh,
that.
my bad. Okay, cool. Let's take it on home, though. Let's go to the video. I know people say, what video, Bob? But I just like saying that because that's what Warner Wolf used to say. I know people, what the hell are you talking about video?
You keep it live, Bob. You do.
All right, Doe, let me go first, okay?
Okay.
Overcome your fear. That's the biggest issue with people investing in being in the stock market and helping helping their finances, their assets grow. Overcome your fear. And I'm just gonna just target it on black folks because we are the biggest one, and we're the ones that have been hurt the most with schemes and all of that, and had the less to work with and the less opportunities. So I know it's embedded in us to have fear, but it's time to have a paradigm shift and overcome your fear because scared money never wins.
And you got to understand, some people say, oh, it's too risky to get into the stock market. But not taking a risk is a risk. And what you risk is losing your purchasing power as you live longer and inflation, ravaging your savings. So you got to find, I can't tell you how much risk you should take, but not taking any risk is a big risk.
Next one is, and we talk about this and ride that horse down the valley and back up the other side, but it's important. Maximize your cash. Don't be having it sit in a traditional savings account only if it's for emergency fund. But even if emergency fund, you can at least put it in a high yielding fund that's paying about 4% right now. So maximize, that's the name of the game, y'all. We ain't trying to make people multi-millionaires and, great, typhoons. But no, we just talking about doing small, measurable steps, but at least maximize. Because you got to stay ahead of one, inflation, because that eats the purchasing power of your money, and two, taxes. And if you're not staying in front of taxes and inflation, it can eat the value of your money. And you might think you're saving a lot of money, but if your money's not working for you, you're not advancing and be able to withstand some of these economic downturns.
And lastly, try to get that paradigm shift of the use of money and think of money not as a medium to buy things you want, but think of money as a medium to help you make more money. And I know that's a big step. But once you can look at money as I'm going to use this money to make more money, it just changes your whole mindset, and it changes how you handle each transaction. It changes how you look at your investments and it also tempers your thoughts on buying things that will depreciate in value, will wear out, that you won't look at or use or need in 6 months, that they come outdated very quickly. And it really focuses you on maximizing your money by using it as a means to make more money.
And that brings me to this though, and this is not, I'm not spending my quote on this, but I saw something that says success is getting what you want, but happiness is wanting what you have. But that's not my quote for today. So let's say I'm not
It
spending.
could be because that's a good one.
Yeah, but it's very true though. So
Got to get away from wanting things.
yeah, yeah, and a lot more people like the millennium, they more into wanting experiences. And
Yeah,
that,
which is cool. Which
but though that's one of my goals. You know, one of my new goals. I got three new goals though.
what are they?
One is I always want to surround myself with love.
Hmm.
Two, I always want to have beautiful and amazing human experiences. And three, I always want to be learning and growing. Those are my three new goals.
Yeah, my sisters put that in my head of being around people whose eyes light up when they see you.
Wow.
Who are truly happy to see you when they
Yeah.
see you. And if they're not, don't be around them.
Oh, and I forgot my other two that I've always had. I've never dropped those off. I don't want to be old and broke, and I don't want to be old and broke up. So with that, I want to shout out though. We got a lot of people on, man. We want to thank you all for being with us this time, and keep those comments coming because we love that and it helps us reach more people with algorithms with Facebook. So we appreciate that. Mo Better, thank you, girl. Thank you for your wonderful questions. Appreciate your humor too, funny. But see, Tom, thank you all. I've learned a lot today. So I am taking your opinions. See, there you go. Stop that thing on foolish girl. Now, what's up now? How you doing? Hope you found your key. No, I'm just stop joking. Have a good Mo Better. Linda, what's up, my sister? So glad to see you. Garnett, so glad to see you. Rodney L. Madison Sr.
Hey, Rodney.
NoteExperience.com. Go out there and learn another good investment. Rodney's doing well with holding notes on all kinds of different properties. Go out there, the NoteExperience.com. Really, you can find out a lot. I said, Garnett. Oh, Gloria, glad you made it on. My sister Gloria, love you. And Linda, man, look, I learned so much from my big sisters, man. They protected me when I was so small, though. And I used to always extort their boyfriends for money. I would sit around and I would leave and they would give me money, so I leave. So I'm sorry. I've asked for forgiveness for that all those years. Joanne Skinner.
Thinking of you being small.
Right. Joanne Skinner, you always a winner. What's up, girl? Thank you for tuning in. And I think don't. We got hey, Bonnie G. Hello, Bonnie G.
That's my big sis.
Oh yeah?
That's the rock in my life, brother.
Hey, Bonnie, what's up, big sis? You know I'm your long lost little brother, right? Just want to let you know that. And then and guess who else we got on here today? Where is his name? Brian Donahue. Is it Donahue?
My nephew.
The nephew, right.
Cincinnati's finest.
Oh, the Nat. The Nat. I want the Nat in the house. So thank everybody for being on. Trust me, we really, really appreciate and we honor and really respect you taking the time. But remember, you all, share this information with other people. It's so important because we only know what we know. And the quote of the week is, the biggest difference between money and time is you always know how much money you have, but you never know how much time you have.
That's a good one. I like that.
I like when I can appease you, though.
I'm bad.
It really means a lot to me because you don't always do that. All right, y'all. Look, take care. Don't get well, man. Get yourself well. Sit back, relax, And I'm so glad this is virtual because you done coughed about 4 times. Have a good day, everybody. No, look, see y'all next week. We here. That's next week is the 18th, though. 213th show.
Wow.
So thank you all. Have a wonderful week, and God bless you.